Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for the close of business on Tuesday, the 31st of March, 2020, getting on to 5:30 in the afternoon. However, we're already reopened because I'm doing this after 5 p.m., and this is how the markets are looking as we're into this hour. Metal markets taking it on the chin. You took it on the chin again in the stock market. One of the things I warned everybody about was the end of the quarter, the end of a month. We had a bit of a rally, and now the question is this market possibly setting itself up for another retest of the most recent lows? There's big arguments on the trade street as to whether it will or won't happen. I'm going to do a report tomorrow. I thought I'd be able to get it done today, but couldn't. I'm doing too much in my studio, getting it still set up. And we're all fortunate that I moved my studio, because if not, you wouldn't be getting any of these. How would I do them? So it's lucky that I did it just before the lockdown. Chicago, by the way, today announced that the governor announced we're going to April 30th now for our lockdown in Chicago. So those are the shut-ins. You can't go to the office building, can't do anything you're not supposed to do, fines and so on. New York already's there. They stopped construction. And now we're starting to hear the St. Louis Fed talking about unemployment in their mind could go to 30-some-odd%. Goldman Sachs, 15% they're saying. Goldman's talking about how much the GDP will take a hit. We know all that. Don't get scared by that. That's what we're in it. You can't change what it is, and that's why the markets are doing what they are. But at the end of the day, probably ideally this month sometime, we see the East Coast get the worst, and then their numbers start falling in the COVID, and it moves through the country, and we get away from this. That's all you can do. You got to say that. Keep your eye on the energy markets, not holding up well. The problem on the energies is the U.S. just keeps pouring out more production. And yeah, I realize there's less that people are talking about. Where are you going to put it all? We're full to the brim. Thank God the government decided not to sell what they had in their reserves. They said they're going to buy some. I haven't seen that happen. So let's take a look at charts. We've had a bounce on a closing basis on a weekly chart so far, and we're up for the week. You wouldn't know it with the big breaks we've had, but for the week, we're still up 21 points in the S&P. I feel like the market's down hundreds of points, not up. All we've done when you put Fibonacci count on this is from this high to this low, you've made a 33% correction, and now the market is starting to question, does it have the power to continue? If it can break through this, then I can argue for the 2,800 level, which would be about a 50% correction. If you break through this low over here, get nervous, because that could mean, and that number, by the way, is 2445, it could mean this rally, this contra trend, this is the big trend, this bounce in this market may have run its course. What would prove traders? Nah, that's not the case. I think if you took out 26.35.75, you'd get the bears to go, oh, maybe there's more. Maybe we're going to get to that 2,800 level or approximately there. If not, you take out 24.45, then you have a different story, because what you'll have done then is broken through these lows. It doesn't mean the trend will turn down. As I define trend, when you look at the swing line, if I come back to this high right here on this day, that high was 26.3450. Then the market comes down, rallies back up yesterday just over it. And now, even though you're starting down, the most I could end up with, if you break, is a higher high and a lower low. I realize the battleground, in my mind at least, is going to be the 18-day average of closes. So I'm very curious as to what happens right here. In the June S&P with the Bollinger Bands, they're far away from the market. The other day I said they're not in play. Well, now they're starting to get ready to come back into play. When you get a market that goes sideways like this, these bands start coming in. They moved out as wide as they did because you broke out from this sideways action up here. Do you remember back in February when you were making a new high in the market? A new all-time high, and then you've got this monster break that came out of sideways action. Don't forget that. You always look to see what the Bollinger Bands are doing. It's an indicator. Doesn't mean it has to happen. You can get whipped, but from that sideways action, I've been teaching charting a long time. That is something I'm geared on. So I see the battleground right at the 18-day average. For the moment, the bulls have control. Momentum is up, higher lows, higher highs, bias is up. Don't argue with that. With the NASDAQ, same thing, but I'm overbought. Not me, the chart is. Any reading in the slow stochastic over 75 is an overbought condition. Now, to get a very bullish condition like you did here, you first become overbought, and then both numbers of the slow stochastic, typically, they have to embed, which means both numbers go over 80 for a short period of time or a longer period. If you look at some of these charts, they've been down quite a while. Look at the energies, you'll see what I'm saying. In any case, I still think the bulls have control at this point, but I'm not thinking in an overbought market you're going to get a lot of fresh buying. You could. Money gets deployed at the beginning of months typically, so we'll see what happens here. In the Dow, the same battleground. You have a market that still has upward momentum and not yet overbought. Battleground 18-day average, the higher low. Now we're getting lower high pattern. This market, if you were to get under 20,778, could end up with lower highs, lower lows, bias down, setting up for a possible test into this area. We'll see where that Bollinger Band would end up too. What about the Russell? Well, the Russell, if we take a look at where we're at, I'm doing this because of the frequency. I'm having a problem in the studio right now. But you can see how you're making a run at the 18-day average. You come back, you challenge it, and now you're slipping a little bit. Again, if you take out this low, that's your problem area. That's what you don't want to see if you're bullish this market. If you take that out, I don't see this market getting the lower high, lower low pattern. I see the market possibly challenging that zone. If you're going to stay bullish, you've got to move out from here and not take out the lows we just made. In the VIX is still a reading here of 53. It's rare that you get bull markets going with a VIX that's this high. And it's had its correction from 82 or so down. I wouldn't be surprised if we fight a battle against that 18-day average. Let's assume I'm wrong. And let's assume the market takes out 50.88 and confirms lower highs, lower lows. Well, then I think the 44 level is the next number. What bothers me is if you get there, you're still in an oversold condition. As we step into the T-bond market, I think I mentioned to a lot of you, I questioned. We had this big rally, and all we've done is we've had a kickback after this correction, but we haven't made a challenge into this. And the Bollinger Band has set itself up to argue that the market could easily get through that with the fact that you're already overbought. As a technician, throw the name off the chart. It's not a chart that I'd love. Same thing in the 10-year note. You've got the higher lows, higher highs. You're overbought, though. You have to either embed or correct the overbought by breaking back. You're challenging this zone, which is a stronger chart than the 30-year, as you can see. Will you go anywhere with it? Because 140.01 is going to be your major resistance point. That's the Bollinger top, as I see it. What about the dollar index? Well, if you were to take out 98.34.5, that could turn the trend back down. Admittedly, you're coming from 104.64, and to say that 600 points lower you want to get bearish, difficult as a trader. But that would change the pattern to lower highs, lower lows. For support down here, then I'd look to see where the Bollinger Band comes in. In the eurocurrency, we're still in an overall downtrend with lower highs, lower low. I think you'd agree with that. The 18-day average is your battleground up to the 100-day. To change this pattern, you'd have to take out 111.87. If you did that, you'd change the pattern. You'd have higher lows and a higher high, and that would give a definitive change, in my opinion. You're not there yet. Japanese yen. All we did is fall back after this rally to the combination of the 18 and the 100-day average, and that's where the market's trying to get its footing. In Bitcoin, the market is fighting a big battle at the 18-day average of